The sky over Gaza darkened long before the bombs fell. It darkened in boardrooms, on trading floors, in quiet offices where wars are not fought but financed. Every modern conflict has two fronts, one of blood and one of balance sheets. Behind every missile strike lies a transaction. Behind every headline about tragedy lies a contract signed months earlier. Behind every public call for peace lies someone whose wealth depends on the continuation of war. When the fighting reignited in October 2023, the world saw horror. Cities leveled, families displaced, lives reduced to rubble. But far from the noise, markets moved in silence. Defense stocks rose, investors smiled, and the global economy quietly adapted to yet another surge of military demand. Governments promised aid. Corporations prepared invoices. War, once again, became good business. The idea is not new. A century ago, nations sold war bonds to their citizens, asking them to lend money to their governments in the name of patriotism. You weren't just buying a bond, you were buying victory. In the 1940s, that message filled posters, radio broadcasts, even Hollywood films. But in the 21st century, the language changed. The symbols of patriotism became lines of credit. Instead of posters, there were prospectuses. Instead of rallies, there were investor meetings. The modern war bond does not bear the face of a soldier. It carries the signature of a banker. In the months after the conflict in Gaza began, billions flowed into a new generation of these bonds, issued under the same promise as before: security, solidarity, and return on investment. The mechanism was elegant, almost too simple. Governments issued debt, investors bought it, and the funds were directed toward the war effort. Every dollar lent meant one more plane refueled, one more system rearmed. For many investors, it was not even about ideology. It was just another asset class, a way to diversify portfolios while supporting a country in conflict. What few realized is that this also meant they became stakeholders in war. Their returns, their coupons, their very profits depended on continuation of violence. And then there were the corporations, the invisible armies of the modern era. They don't march, but they supply those who do. The moment the first missiles flew, the demand curve for defense product exploded. Drone manufacturers received record orders. Missile suppliers extended production hours. Companies that produce surveillance software and battlefield communications quietly released press statements about increased operational tempo and growth opportunities in emerging markets. These are euphemisms, polished phrases that mask the truth. The more destruction there is, the higher their quarterly revenue. On stock exchanges, graphs spiked upward as if reflecting the flames rising from Gaza. Defense indices outperformed every other sector. Traders who had positioned early in the right companies saw double-digit returns within weeks. The irony is brutal. While families in Gaza search for clean water, investors elsewhere refresh screens to watch their wealth grow. In every war there are winners and losers, but only in modern ones do profits rise in real time, synchronized with airstrikes. It's easy to think these profits are abstract, detached from the physical suffering of war, but they're not. Every factory that ramps up production of artillery shells employs real workers whose jobs depend on continued demand. Every logistics company contracted to transport weapons across borders earns margins that disappear when the guns fall silent. When peace threatens a flow of orders, lobbyists get to work, reminding governments that national security requires constant investment. It's a perfect circle. Fear fuels spending. Spending fuels profit, profit funds lobbying, and lobbying ensures that fear never fully disappears. During the Gaza war, something else became evident: the transformation of war into a fully integrated industry. Governments began expanding domestic manufacturing, signing massive contracts with local defense companies to produce bombs, drones, and precision-guided munitions inside their own borders. This move was presented as self-reliance, but economically it meant something deeper: the creation of a national war economy. The money raised through bonds, taxes, and foreign aid no longer flowed outward. It circulated domestically, enriching corporations, shareholders, and political allies. War became a form of internal stimulus, a generator of jobs and GDP growth that no one dared question publicly. But as profits surged in one part of the world, the other side collapsed entirely. Gaza's economy disintegrated. Entire sectors vanished overnight. Factories bombed, farmland scorched, trade routes cut off. Economists estimate the region's GDP contracted by over 80% in a single quarter. More than 500,000 jobs disappeared. Electricity grids, water systems, and hospitals were turned to dust. What was left wasn't just poverty. It was economic annihilation. Yet, paradoxically, this devastation planted the seeds of another kind of business opportunity. Because when the bombs stopped falling, the contracts for rebuilding began. Roads, schools, desalination plants, hospitals, all must be reconstructed. That reconstruction will be financed not by the people who live there, but by international loans, aid packages, and development funds. Every dollar sent for humanitarian rebuilding will pass through a chain of intermediaries, contractors, logistics firms, security companies, consultants. And many of those companies will be the same ones that profited from the war's destruction. The story of profit in war doesn't end when the guns go silent. It only changes accounting categories. Once the destruction is complete, the phase of reconstruction investment begins, and the same financial institutions that underwrite bonds for conflict begin underwriting loans for peace. The cycle is so polished that few even question it. Governments issue new debt to rebuild what their bombs have destroyed. International banks and development funds step in with humanitarian financing that carries long-term repayment terms and generous interest. Reconstruction, like war, becomes another commodity, an exportable product for those who can build faster than others can recover. By the spring of 2025, development conferences were already being scheduled. The language sounded noble: resilience, renewal, humanitarian partnership. But the contract behind the speeches were old friends in new suits. Cement conglomerates, heavy equipment manufacturers, and infrastructure giants, many of which had quietly supplied the war effort, began bidding for reconstruction projects. The tragedy of Gaza became an index of opportunity on corporate balance sheets. For insurance companies, it was a new field of risk. For logistics firms, a new route. For investors, a new frontier of emerging market debt. The logic is cruelly simple. Destruction generates scarcity. Scarcity creates demand. Demand requires financing, and financing requires lenders. The result is that even ruin has a price, and someone somewhere collects it. Every bomb that destroys a building guarantees a future contract to rebuild it. Every family displaced becomes a statistic used to justify billions in reconstruction funding. In a world where markets measure need in dollars, suffering is not only documented, it is monetized. Meanwhile, the flow of public money that fuels these cycles rarely stops to ask moral questions. When legislators approve defense budgets or aid packages, the language of stability and security conceals the same thing: liquidity injections. Each crisis becomes an economic stimulus by another name. Global supply chains adjust, commodity prices shift, and arms manufacturers schedule new production runs. On trading screens, volatility is opportunity. On the ground, it's devastation. What makes a Gaza war a defining case isn't only its human cost. It's how transparently financialized the entire process has become. Ratings agencies analyze sovereign exposure conflict as if grading corporate mergers. Hedge funds trade on war headlines, betting on oil currency pairs and defense stocks. Pension funds invest in sovereign bonds that, indirectly, sustain the machinery of conflict. And because it's all legal, regulated, audited, and reported, no one calls it what it is: the quiet monetization of destruction. The human brain wasn't built for this scale of abstraction. It can understand a ruined street, a hungry child, a displaced family, but it struggles to visualize an index fund allocating $10 million into defense equities because volatility favors growth. In the spreadsheets of investors, tragedy becomes data. The fireball in a distant city is just another line item, contributing to quarterly performance. The irony is that war finance has become almost invisible to those who benefit from it most. For the average citizen, it's hidden behind mutual fund tickers and government bonds in retirement portfolios. The money that funds missiles today may also fund their pensions tomorrow. It's a financial Ouroboros, consuming itself endlessly, producing returns from ruin. And because everyone benefits a little, no one takes responsibility for the whole. When peace talks eventually begin, another type of investor steps forward: the geopolitical strategist. Aid is repackaged as influence. Loans become levers of control. Countries that contribute to reconstruction often secure favorable trade terms, resource access, or diplomatic alignment in return. What looks like generosity is sometimes just the next phase of acquisition. War, after all, rearranges ownership. In its aftermath, the spoils aren't cities, they're contracts, ports, and concessions. For Gaza, the coming decades may mirror the experiences of other war-torn regions where every bridge rebuilt and every power plant restored came with foreign oversight. The debt will linger long after the smoke clears, anchoring the region in a new kind of occupation. Not military, but financial. The weapons may be silent, but the interest compounds daily. It's tempting to believe the system can be reformed, that transparency, ethics, or regulation could somehow sever profit from violence. But the truth is more unsettling. The global economy itself depends on movement, and war guarantees it. Conflict disrupts supply chains, stimulate innovation in surveillance and logistics, justify subsidies, and generate vast flows of capital. A world permanently at peace would also be a world of stagnation for those who profit from motion. So the engine keeps running, lubricated by fear and hope in equal measure. For those trapped inside it, none of this is theoretical. The mother searching for food doesn't know that her misery is priced in commodities markets. The worker producing missile components doesn't imagine his product landing on civilian homes. The investor buying defense stocks doesn't see faces, only percentages. The invisibility is the point. Finance transforms pain into abstraction, so that conscience never interferes with profit. And yet, understanding this mechanism is a first step towards seeing war for what it truly is. Not chaos, but design. Money doesn't just follow war. It anticipates it, funds it, and cleans up after it. The pattern repeats across continents, from the Balkans to Iraq, from Ukraine to Gaza. Each conflict becomes both a warning and a business plan. When history looks back at this era, it might not measure the Gaza war by the number of casualties or the tonnage of bombs, but by the flow of capital it unleashed. Because that's what defines power today, not armies or borders, but who can turn crisis into currency. The real winners are not those who conquer land, but those who control the ledger. So when you hear the word reconstruction, remember that it often means refinancing. When you hear aid, think leverage. And when you hear peace, listen closely for the quiet hum of industries preparing for the next order. The machine has no morality, only momentum. And if you want to understand the next war, follow the same trail. Through the bond markets, the trade fairs, the polished halls where defense executives clink glasses under soft light. The clues are never hidden. They're just written in the language of profit. Because in the end, wars don't end anymore. They just change accountants.